would say the biggest issues affecting the market today are unique over the last 3 years. First issue I saw would be the reinsurance availability and pricing. Last quarter, the market was really, really constricted with reinsurance availability, and there were significant cost increases, which are very difficult in a short term to try to figure out how to manage those costs. So that was one risk that really impacts 2023. I would then say an extended period of inflation is also unique, and that also has ramifications to your business. The cost of settling claims are higher, cost of employment labor is higher, and you have to factor that into future loss experience. And that's a challenge because we haven't had inflation in many, many, many years. Third would probably be another type of inflation, which would be social inflation or the cost of settling liability claims. As jury awards increase, it gives the plaintiff's bar more incentive to put pressure on settlement so that you don't go to trial, and that drives up the cost of litigation. I think another issue I have to deal with is telecommuting and the impact of telecommuting on corporate culture. Prior to COVID, we had a corporate culture that was very much family, a lot of communication. No one really telecommuted. Now we're a hybrid. So I see the employees at most 2 times a week and never together on the same day. So that's something to manage. It's not insurmountable, but it's a challenge and something to deal with that we didn't really have to. And probably the last thing I see affecting us from the marketplace might be increased regulation and legislation in New York State. Something we've always had to deal with, but over the last 3 or 4 years, the cost of compliance with some of the regulations, whether it be cyber or social justice or diversity, while great topics to deal with, it does cause small companies a lot of time and expense to comply. So those are probably 5 of the new risks or new areas where we have to focus as a company to manage the company better. At the New York market, for me, being a single state writer, I have a hard time comparing it to the rest of the marketplace throughout the country. However, I do know there's one issue we deal with that is unique to New York, and that would be the scaffold law, or what they call the labor law here in New York, which is strict liability from falls for elevations on commercial risks. And that has a very expensive component when it comes to settling claims and the availability of types of products you can write in New York based upon that exposure. So again, as it relates to the rest of the country, it's very difficult as a single state New York writer to know what some of the other issues are across the country. But I know in New York, one of the biggest ones we deal with are the impacts of the labor law on liability claims. Well, Erie Niagara is a predominantly property writer. We do not write auto or comp. So a lot of our policies are habitational risks. And the last 3 or 4 years, the New York State legislature have been wrestling with eliminating the lead paint exclusion in all of our policies. That exclusion was put on in the mid-90s because of the cost of claim settlement on lead paint claims. And if they do eliminate that exclusion, it will cause chaos in the habitational marketplace, because I'm not sure, based upon the past, what the cost would be and how you'd have to react to rates if, in fact, that exclusion was eliminated. So that's the one we're following the closest. The other would be a more recent one, which would be the legislature looking at some of the attributes of underwriting risk management and whether or not you can have risk-based activity in your underwriting, for instance, zip code as a component of your rating and things of that nature. So again, if they eliminate the ability for us to use metrics to set rates that are based on statistics, that could, again, cause us to really take a look at how we rate in New York State. Well, Erie Niagara is a policyholder-based company, and so we always have to look at the policyholder as what we do for them. When we look at the market conditions, and we talked about some of the pressures on the company from whether it be inflation or legislation or reinsurance costs, we always have to remember that we're owned by the policyholders, and it's our duty to make sure the company's financially strong, make sure that our rates are competitive and fair, and we have duty to service and claims to the point where they're being protected. So as the market changes, we just have to make sure our policyholder is first and foremost, that we protect them financially, we pay their claims promptly, and we provide services that make them want to be policyholders. So we're just doing a lot of what we do, staying in our niche and not going too far outside of it if we're not comfortable. NYIA is a great support for small companies because being Buffalo based, Albany, while still in New York State, is still a 6-hour ride east. And it's very difficult for us to stay in touch with what's going on in Albany legislatively or regulatory wise. So NYIA, there are our ears and our eyes, and they tell us what's going on so we can be prepared. We can have a voice. They can be our voice. We're too small to be able to fight the fights ourselves. So with NYIA, we've got an organization that knows our business, knows our culture, knows the cooperative industry. They can keep us informed of issues, and they can activate us from a grassroots basis if we need to, because by ourselves, we're too small. And being part of that organization is very important because, again, that's another aspect of running the company that if I had to take the time to be a lobbyist, I'd take my eyes and ears off of what I need to do here. Well, first and foremost, I'm excited about NYIA coming to Buffalo. I'm a Buffalonian, born and raised. I'm also excited that Charlie Mackey, our NYIA chair, is also from Buffalo, and we'll be able to showcase this city to the rest of the state and let the people know what's going on in Buffalo. That's exciting. We also get to talk up the Buffalo Bills. Charlie and I are big Bills fans, so I'm sure there'll be a little bit of a Bills theme going on in our dialogue. Also, at the NYIA conference is really, to me, like old homes days. It's my chance to network with my peers, my chance to dialogue with people who run other companies of my size and single state and the types of products I write. It's like a family, and having them come to Buffalo and being able to network, learn a little bit through the educational program, and hear some really good speakers. Normally the conference will have the superintendent speak. Gives us an opportunity again to have that eyes and ears on what's going on in Albany. And it's just a very good networking conference.